And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, here on Protect and Grow. And we always appreciate the time and the information and the insight, Tim. Today, we're going to be talking about one of the maybe more debated elements of the financial world. It is Annuity Awareness Month, and annuities are something that is debated as the pros, the cons, the benefits, the disadvantages. Talk to us, Tim, about annuities and what we need to know about them.
Well, Peter, the big thing that we're talking to our clients about is the guarantee. That people are only 15% of society has pensions right now. And people, like certainty when they go into retirement. Baby boomers have seen their parents use pensions and have a great retirement. And, they want the guarantee, the being able to know that every month they're going to be okay and be able to pay their bills.
Well, Tim, as your tip of the week, good, bad, ugly, or just a tool? What do we need to know about annuities?
I think it's just a tool. I don't think one size doesn't fit all. When you do a plan, there's going to be a tool that's part of the repertoire to get someone through a 30 plus year retirement that they can't outlive their money. And that's very important for every baby boomer I've dealt with.
Why do baby boomers and retirees value guaranteed income, Tim?
Freedom. They want consistent monthly payments, just like when they were working. They want freedom from market concerns that, especially with the volatility we've seen the last 90 days. They want confidence in covering their expenses, and that's so important to them.
At its core, an annuity is a contract. It has certain guarantees. What are the purpose of those guarantees, Tim? What can an annuity provide?
Well, it's going to give them, certainty. It's going to the guaranteed income creates confidence for them, and and the annuities are going to replace the disappearing pensions that we've seen out there.
And are there different qualities or aspects of an annuity that a potential investor should be aware of?
Sure. I mean, there's principal protection. It's tax deferred growth, lifetime income, some market participation, but with downside protection, and the long-term financial guarantees.
So if we're talking about income or longevity or aversion to risk of the market, these are the kind of reasons why people would consider an annuity.
Right. And that's the income problem, the protection problem, the longevity problem, and the growth problem. They answer all that. And
But there are
what's
different,
important to them.
I'm sorry, there are different types of annuities. Not all of them solve all of those problems, right?
No, exactly. There are different ones. Let's just talk about a couple of them. For example, there's variable annuities. The variable annuities have, they're mainly in the market. There's going to have growth potential. There's market participation. There's tax deferred growth. However, there's also market risk there, and there's potentially higher fees, and there's a lot of complexity to those.
What
So,
are the other types of annuities, and what would they help us achieve?
well, the other annuities that I like are fixed index annuities, which would combination of the fixed annuities. Fixed annuities are going to give you a interest rate that is guaranteed for the length of the contract. So let's say it's 3%, rain or shine, that's all you're going to get. The variable annuity is going to be variable. So the fixed index annuity are the ones that I use in my practice because the principal is protected from market losses. The growth is capped or limited, and there's some market participation, but the pro on that is that the principal is protected. There's potential for higher returns, but the con would be that there's participation limits and there's growth restrictions.
So, Tim, if I heard right, a portion of the upside, but none of the downside of the market, none of the risk.
Exactly, and that would help you set up with a guaranteed income.
And Tim, if we actually do need income from an annuity, there's a couple different ways that can be done.
Right. I mean, you can do it where it's market linked, not market invested. That's the type of thing that we've looked at.
And if I need it immediately, or if I don't need it quite yet, maybe you want to defer it down the road. Again, different time frames there.
Of course, there's ones that you can turn on, which are immediate annuities, and there's ones that you can defer down the road.
So we've talked about this phenomenon of the income gap. Are annuities a common tool for helping an investor fill that income gap, Tim?
Right. So when you do what we call as a protect and grow plan, we would go through a person's expenses. And let's say they have $8,000 a month and they have $4,000 of guaranteed money coming in, whether it be Social Security or maybe they still have a pension. They have a $4,000 gap. We need to backfill that. How are we going to do that? And we want it guaranteed. It might be a pension. And with that, we would use a pension or an annuity. And the annuity would we don't want to expose them to volatility or sequence of returns risk or even longevity risk. We would use an annuity in this example.
Why would we consider an annuity here versus market-based investments, Tim?
Well, if the market goes down, you're going to have an uneven amount of money coming in. And what I found with most boomers or even retirees for that matter is they want guarantees. They want to know that the same amount of money is going to come in each month, and they want that certainty.
Guarantees over speculation and the risk of a volatile market.
Exactly. They want, just like Social Security or pensions, they want a certainty.
We've talked about in past shows, Tim, the weighing the values and virtues of possibility versus probability. We are going for a higher probability when we are opting for an annuity over the higher possibility of the market.
Right. You probability versus certainty. I mean, who would not want certainty in retirement, especially if you're in your 60s and 70s? You want to know that your bills are being paid.
Also, helping to address that longevity risk that we worry about. I mean, we all want to live a long time, but financially, that can put a strain on things.
Well, this is the best part of it. Income continues regardless of your lifespan. The payments cannot be outlived, and they transfer risk from the retiree to the insurance company.
Living longer is both a blessing and a risk, but an annuity can help to address that risk. The longevity increases uncertainty financially, but the annuity can protect against that longevity, Tim.
Exactly. And now, not to mention, there's also other bells and whistles that come with that. And we've talked about this before, but there's also healthcare riders that are on here. For example, there's a doubling income for qualifying long-term care needs. There's enhanced withdrawals for chronic illnesses, and there's increased payments under specific health conditions.
So
So,
those all sound like pretty substantial benefits, Tim, especially for a retiree wondering, do I have enough? How can I make this money last? Will I run out over my lifetime? But what are some of the drawbacks of annuities?
right. There is some what if moments that you need to look into. There's going to be reduced liquidity. The money may be committed for years. Complexity. The many contracts are difficult to understand. There might be surrender charges. There's some inflation risk, and there could be even opportunity costs. If the market goes up a lot, you might not capture all that. But the guarantees have trade-offs, and liquidity does matter in some cases.
Well, coming full circle, Tim, as you began the show saying they are just a tool, maybe one of the biggest annuity mistakes is painting with too broad a brush, saying they're always good or always bad.
Right. And that's not true. Again, what we started with in the beginning of this is that it's going to be a tool. It's going to be part of your arsenal to get through retirement. It's the protect and grow plan. This is part of the protect that you have an income coming in that has a certainty to it.
Well, in conclusion, Tim, what are some of the big takeaways that a investor considering an annuity or looking out at their financial future with questions of uncertainty should consider if they are discussing what tools to utilize for those purposes?
Well, I mean, it's going to create a lifetime income. It's going to reduce market dependence. It's going to address your longevity concerns, which is one of the number one killers of a retirement. And it's going to improve your retirement confidence. So it helps fill income gaps left by the decline of traditional pensions. So the key is understanding what you're trying to accomplish and choosing that right tool for the job.
Once again, if you would like to consider the pros, the cons, the benefits, the disadvantages, and most importantly, if you would like to get your Protect and Grow plan put together, pick up the phone, give Tim Stearns, TJ Stearns Inc. a call, 800-640-2256, 800-640-2256. Finally, Tim, as we are looking at or discussing and considering annuities, what are the rates of these things right now? Are they attractive? Is it a good time to consider an annuity?
Well, in my 32 years, this is the best interest rates I have seen ever. In fact, if you've bought one even in the last 5 years, let's say, right now is a great time to be refinancing them. I refinance my own. In fact, this is a great time to be doing that.
Well, if you would like to draw a maximum guaranteed lifetime income, or if you're looking for a protect the principal and live off the interest kind of approach for your lump sum, you can discuss those approaches and how to achieve them with an experienced, qualified professional, Tim Stearns, CFP. And of course, as always, get a full plan put together, your Protect and Grow written retirement blueprint. No cost, no obligation. It is a courtesy service that they offer there at TJ Stearns Inc. Pick up the phone and give a call, 800-640-2256. That's 800-640-2256, 800-640-2256, or online at tjstearns.com. That's tjstearns.com. Tim, always appreciate the time, the information, and the conversation here about our important financial planning matters.
Tune into Chicagoland Certified Financial Planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals or growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.